I just included Vimeo stock on my watch list, and today I'm going to explain you why Vimeo may be a good investment opportunity. Vimeo is a $600 million market cap company whose IPO took place in May 2021 during the COVID bubble at a price of $55 per share. But since then, the stock has been falling like a knife, as you can see here, reaching as low as $3 at the bottom, which means that Vimeo stock fell more than 90% since its first trading day. But the thing is that the company seems to be much better now than it was back then. In 2021, investors were willing to pay more than 7 times revenues for Vimeo. But now that the company is finally profitable though, now that they are generating cash, the market changed its mind and currently is only paying around 1.5 times revenues for them. And it's true their revenues have been falling, and this is concerning because you may ask yourself, well, is Vimeo losing its relevance? But one thing is certain, Vimeo is gaining a lot of attention from companies of all sizes. Last quarter, for example, they've welcomed customers such as Aramco Europe, Southwest Airlines, Gartner, Domino's Pizza, and University of Southern California. Now, investing in Vimeo is a way of taking advantage of the rising of video as the main channel to communicate ideas and to connect with each other. Everybody knows video is the future of content creation, and Vimeo, together with YouTube, is one of the main players in this field. So I can see growth in the long term here. Now, what's the difference between Vimeo and YouTube? Well, as I read this week, if YouTube is a public convention, then Vimeo is an art gallery. On YouTube, you can reach a much bigger audience, but your videos can get really compressed. You can lose a lot of quality posting on YouTube, but not on Vimeo. Also, on Vimeo, as a content creator, your videos will not be shown in the middle of a sea of content, with your competitors' content being recommended right in the corner. You have also more sharing capabilities on Vimeo. You can, for example, specify that only people who have access to a certain website can see your content, while on YouTube you cannot do this. Ultimately, these two business models are very different from each other. For example, while YouTube makes most of its money mainly through AdSense, Vimeo's revenues come from a subscription model which users pay so they can post their videos there. Now, is Vimeo fairly priced? Let's find out. And to do this, we are going to do some valuation exercises to check this. But before we continue, if you are enjoying this video, please hit the like button and also consider subscribing. Now, Vimeo has a 22.4% average growth rate per year, right? And I know that these years here were exceptional years, but we will consider pessimistic premises here. After all, we want to keep the bar low because we want to buy good businesses trading at low valuations and thus at low expectations. Now, they delivered a 22% growth rate on average in the last years. Would you say I'm being too aggressive if I count on 4% growth for the next 8 years? Well, because I don't think I am being aggressive, so let's consider 4% growth. Now, Vimeo's operating cash flow margin has been improving as this business matures, right? Last year, they delivered a 9.1% operating cash flow margin. So what if we count here on our projection on a 5% operating cash flow margin? I think it's quite possible for them to deliver this. Now, as this is a capital-light type of business, you can see that their capex is really low, which means they have to reinvest very little back into the business. So because of this, most of the operating cash flow becomes free cash flow. This is why they have, on average, a 97% free cash flow conversion rate. And in this projection, we will count on 90% below their historical average. So even if they deliver below average results, this valuation will still make sense. Oh, and by the way, this is not investment advice. Anyway, let's continue. So taking these premises into account, this would mean that the fair price for Vimeo stock today would be $3.57, which is more or less where the stock is trading today. But what if they deliver better results than what the market seems to be expecting, right? So what if they deliver a 7% growth rate together with an 8% operating cash flow margin? And let's say they really keep on delivering a 95% free cash flow conversion rate, right? Which is even so below what they delivered in the past. So this means that the fair price for Vimeo stock today would be $5.36, which would represent a total return of 52.6%. So now we are starting to see the upside. And the thing is that they can grow more and the margins can get bigger. And it seems that they are trading for a really low valuation at really low expectations for such a company, right? I mean, excellent business model. They also don't have any debt. I mean, they have more cash than debt. Anyway, I'm leaving this Excel sheet in this video's description so you can play with the numbers and see which premises are reflected at each price. Just don't forget to leave your like and to subscribe. Now, one thing I didn't like about Vimeo and that you should be aware of is the fact that there's not much skin in the game here, as the board of directors almost doesn't own any shares, as we can see here. Here, all current executive officers and directors as a group, 10 persons, they only own 0.8%. And I don't like to see this because for me this is an indication that maybe the people who manage this business just don't put a lot of faith in here. Well, let me know what you think down in the comments. That's it for today. See you next time.